Asia is very significant to Bain Capital. We had a $1 billion fund here. We've just completed a $2.3 billion fund, and we have many people in the region. And economically, Asia really is growth, the future of global economies. I think it's going to model global GDP, and right now, China is the second largest economy. So I would suspect that as Bain Capital activity builds in China, it will probably become at least the second largest, and as things grow, maybe even equal to the rest of the world. Well, the Bain model, which started out around 30 years ago, was built off the premise that you could take analytic consulting skills, apply that to grow and build great businesses. So obviously that applies to just more than private equity. It applies to venture capital. It applies to picking good companies for a stock portfolio. It applies to evaluating debt opportunities. So at Bain Capital, we've kind of built a model to say we can really study companies, look at their competitors, their costs, their projections, and figure out which ones are going to win and which ones will lose. And in private equity, we try to buy the companies, invest in companies that have a long-term strategic growth plan that we can help build. Well, the way you apply the skills of analyzing businesses, it really goes across the entire platform. So if we're looking to make an investment, or let's say our Brookside fund is looking to make an investment in a company, we study that company's cost position, we study the company's market share, we study can they grow, and our guys do a great job at really digging down and finding great management teams that are going to build companies, and those stocks do well. I think there's different reasons that PE firms on their own, this globally. One of the main ones is if they have a couple of founders that need liquidity. We actually have a broadly diverse spread of ownership of Bain Capital in a large group of partners. So there's no need for any partners to get liquidity. We like not being public because we can operate, without all the bureaucracy involved in being public, the red tape. So we can be lean and mean, make decisions, move forward. So we don't have any plans to go public at this point in time. We'd look at it if it had some kind of competitive advantage, but we haven't seen it. We actually see a great advantage of being private, staying low key, really making the stars of the business our management teams and not us. Well, the fund sizes will definitely be smaller than they were in the past. Now, at Bain Capital, we've always based fund sizes on our projections of how much money we can invest in companies productively to get great returns for investors and really build great companies. With the financial crisis, there's less debt available. There's been less activity. So most of these large funds will be somewhere between 25 and 30% less than they were before. That being said, the positive of less capital out there is it's a better market to be a buyer. And we have always stayed in the mid-market. We've done large deals and small deals. So we're very well positioned in this environment because we're really kind of doing the same things we've always done for the last 30 years.